What if I told you that your loved ones could lose 40% of their inheritance to tax? Yes, that's right. Without proper planning, nearly half of your hard-earned money could go to the government instead of your family. But don't worry, in this video, I'll show you exactly how inheritance tax works and, most importantly, how to reduce or avoid it legally. Part 1. What is inheritance tax? So, what exactly is inheritance tax, or IHT? It's a tax on the estate of someone who has passed away. That includes money, property, and possessions. But here's the good news: not everyone pays it. The current thresholds. If your estate is worth £325,000 or less, you pay no tax. Anything above £325,000 is taxed at 40%. If you leave your home to your children or grandchildren, the tax-free threshold increases to £500,000. Example: let's say your estate is worth £600,000 and you leave it to your children. The first £500,000 is tax-free, but the remaining £100,000 is taxed at 40%, meaning your heirs will pay £40,000 in tax. That's a huge amount. But don't worry, I'll show you how to reduce this in a moment. Part 2. Who pays and when? So, who actually pays this tax? Well, it's not you, it's the people who inherit your estate. The tax is usually deducted before they receive their share. When is it paid? It must be paid within 6 months of death. If not, interest starts adding up, making it even more expensive. Now, let's talk about how you can legally reduce or even avoid inheritance tax. Part 3. How to reduce or avoid inheritance tax. Number 1. Give gifts while you're alive. Did you know you can give away up to £3,000 per year tax-free? That's called the annual exemption. Plus, if you survive 7 years after making a large gift, it won't be taxed at all. Example: let's say you gift your child £50,000 today. If you live for more than 7 years, there's no tax on it. But if you pass away sooner, tax may apply on a sliding scale. Number 2. Leave everything to your spouse or charity. Good news. If you leave your estate to your spouse, civil partner, or a charity, they won't have to pay any inheritance tax at all. Number 3. Trusts. Placing your assets in a trust can keep them out of your estate, meaning less tax. It's a great way to protect your wealth for your children. Number 4. Take out a life insurance policy. A life insurance policy can help cover the inheritance tax bill, meaning your heirs won't have to pay out of their pocket. Just make sure the policy is written in trust to avoid it being counted as part of your estate. Part 4. Final thoughts. The key to avoiding inheritance tax is planning ahead. By using these strategies, you can protect your family's future and make sure they receive what you worked so hard for. If you found this helpful, hit the like button, subscribe, and turn on notifications for more financial tips. And if you have any questions, drop them in the comments.